On April 3rd, 2025, Vietnam's stock market had the worst day in its 25-year history. Washington had just announced a 46% tariff on Vietnamese goods. The VN index fell almost 7% in one session. Most stocks on the exchange hit their daily loss limit and simply stopped trading. There were no buyers left. If you watched my last video, you know that tariff. It was the moment Vietnam stopped being a bystander in the trade war and became a target. Now here is what nobody expected. 6 months later, that same market was one of the best performers on Earth, up more than 50%, record highs. And in October 2025, it got the news it had chased for nearly a decade: promotion into the world's emerging market club, with an estimated $6 billion of foreign money set to follow. This is the story of Vietnam's stock market. 25 years of manias, crashes, and frauds, all leading to a single date this September. On July 28th, in the year 2000, Vietnam opened a stock exchange in Ho Chi Minh City. It listed exactly 2 companies. One made refrigeration equipment, the other made telecom cables. The market traded a few sessions a week, and on quiet days, barely anything moved. Today, that exchange trades billions of dollars a day, and 13 million Vietnamese hold brokerage accounts, 13% of the entire population. But between those 2 points, this market destroyed its investors twice. The first time was 2007. Vietnam had just joined the World Trade Organization. Foreign money rushed in, and the country caught stock fever. Taxi drivers traded between fares. The index climbed from around 300 points to nearly 1,200 in about a year. Then it fell 80%. By early 2009, the market had given almost everything back, and it would take more than a decade to return to its old peak. Foreign fund managers filed Vietnam under a label that would stick for a generation: frontier market. Promising, exotic, and too small and too messy for serious money. Vietnam spent the next 15 years trying to tear that label off. Fast forward to the pandemic. Stuck at home with smartphones and cheap brokerage apps, ordinary Vietnamese rediscovered the stock market. New investors even got a nickname, F0, borrowed from the term for a fresh COVID case. Account openings broke records month after month. That created one of the most unusual markets anywhere. In most countries, institutions dominate trading. In Vietnam, retail investors came to account for roughly 85 to 90% of daily volume. A market of individuals is fast, emotional, and prone to stampedes in both directions. It is also easy to manipulate. And in 2022, the bill arrived. First, the chairman of FLC Group was arrested for pumping and dumping his own company's shares. Then came the big one. Trong My Lan was a property tycoon who started out selling cosmetics in a Saigon market stall. Over 3 decades, she built an empire called Van Thinh Phat and quietly took control of one of Vietnam's largest private banks. Prosecutors say she used that bank as her personal ATM for 11 years. Thousands of shell companies, loans to borrowers who did not exist, cash moved out in boxes by drivers who knew not to ask. The total damage across her case? Around $27 billion. The embezzlement conviction alone, more than $12 billion. Roughly 3% of Vietnam's GDP drained from one bank by one woman. In 2024, a court sentenced her to death. Then, it gave her a way out. Return $9 billion, 3/4 of what was taken, and the sentence becomes life in prison. She is now selling off buildings to save her own life. Her arrest in October 2022 triggered a run on the bank. The government stepped in, the property bond market froze, and the stock index lost 1/3 of its value in a year. Vietnam's anti-corruption drive, the campaign its leaders called the Blazing Furnace, had reached the financial system. And that painful cleanup is precisely what made everything that follows possible. You cannot invite the world's pension funds into a market where a bank can quietly go missing. In August 2023, a Vietnamese electric car company called VinFast listed on the Nasdaq in New York. It had sold about 11,000 cars in the previous 6 months. It had never turned a profit. On its first day, the stock rose 68%. Within days, VinFast was valued at more than $85 billion, more than Ford, more than General Motors. For a brief moment, more than both of them combined. The catch was that almost none of the shares actually traded. The float was tiny, so a little buying moved the price a very long way in a market with no brakes. Within months, the stock had lost more than 90% of its peak value. VinFast still builds cars, but for global investors, the stock confirmed a view they already held about Vietnam. The ambition was world-class, and the market plumbing was not. To graduate, Vietnam had to fix the plumbing. So what actually kept Vietnam in the Frontier League? Not size, not growth, paperwork. Start with a rule called pre-funding. If a foreign fund wanted to buy Vietnamese stocks, all the cash had to already be sitting in Vietnam before the order was placed. No major market works that way. For a fund managing positions across 50 countries, it was a deal breaker. Then there was the exchange technology. A new trading system, built with the Korea Exchange, took roughly a decade from contract to launch. In Ho Chi Minh City, its delays became a running joke. And there were foreign ownership limits. Many of the best companies were simply full. Foreigners could not buy more at any price. One by one, the walls came down. In late 2024, regulators scrapped pre-funding for foreign institutions. In May 2025, the Korean-built trading system finally went live. Rules for handling failed trades followed, and new regulations in 2026 opened access further. The government declared the upgrade a national mission and courted the index companies the way a startup courts investors. Because here's the thing about market status. It is not decided in Hanoi. It is decided in London by an index provider called FTSE Russell that sorts the world's markets into leagues: frontier, emerging, developed, and trillions of dollars follow those rankings automatically. Which brings us back to 2025, the year that tested all of it. April brought the tariff shock and that record crash. If foreign capital was ever going to write Vietnam off, this was the moment. Instead, Vietnam negotiated the tariff down to 20%. The economy kept growing at one of the fastest rates in Asia, and the market did not just recover, it kept climbing until it broke its all-time record. By late September 2025, the VN index was up almost 58% on the year, touching 1,928 points. Vingroup, the conglomerate behind VinFast, saw its shares roughly triple and dragged the whole index up with it. The strange part? Foreign investors missed the rally. They had been net sellers for most of 2 years. 13 million local accounts drove one of the best market runs in the world while the professionals watched from outside. Then, on October 7, 2025, FTSE Russell made it official. Vietnam promoted. Frontier to emerging, confirmed at a final review this April, effective September 21, 2026. So where does $6 billion actually come from? Here is the mechanical part, and it is worth understanding. Take one fund. Vanguard's Emerging Markets ETF, ticker VWO, holds about $90 billion and tracks the exact index Vietnam is joining. When Vietnam enters, Vietnamese stocks become roughly 0.25% of that index, which means this single fund must buy about $200 million of Vietnamese shares. Not may, must. It is written into how the fund works. Now multiply that across every fund tracking FTSE's emerging markets indexes. Add the active managers who follow them, and you reach the estimates. Around $6 billion, phased in over a year starting this September. The World Bank thinks the longer game could reach $25 billion by 2030. And right now, as you watch this, FTSE is publishing the final list of which Vietnamese stocks make the cut. The shopping list is literally being printed. Now the part the celebration skips. Even today, 2 months before the money arrives, foreign investors are still net sellers of Vietnamese stocks. They sold through the rally, they sold after the upgrade announcement, and they were still selling this summer. The index has cooled from its record back under 1900. The smart money, so far, remains unconvinced. The skeptics have three arguments. The market is still a casino, individuals still drive most of the volume, margin debt sits near record highs, and a market of 13 million borrowers overshoots in both directions. April 2025 was not an accident, it was the market's character. The doors are open, but the rooms are small. Foreign ownership caps remain, and many of the best companies are effectively sold out. Money can arrive and find nothing it is allowed to buy. That frustration is how inflows turn back into outflows. And FTSE is only one referee. MSCI, the bigger index provider, still calls Vietnam a frontier market. That campaign starts the morning after this one ends. But pull back and look at the whole arc. A market that opened with two stocks survived an 80% crash, a retail mania, the largest bank fraud in its history, and the sharpest tariff shock in the world. It reformed, deliberately, for years, to meet a standard set an ocean away. And it was carried the entire distance not by Wall Street, but by 13 million ordinary Vietnamese who kept buying when the professionals would not. On September 21st, the autopilot money starts flowing, on a schedule, whether the skeptics believe or not. For 25 years, Vietnam knocked on the door of global capital. This September, for the first time, global capital has to knock back.